India's largest passenger car maker Maruti came out with the numbers slightly below what the street was anticipating. Just to take a perspective on the numbers, revenues up 5%, profit up 5%, EBITDA up 9%, which means EBITDA margins of 10.2%. The estimate was well in excess of 11%, and higher raw material cost impacted the margins, and lower other income and higher depreciation impacted the profit. Obviously, what we also worked for the profit was that tax rate was much lower this time around. But let's get in a perspective. Ankit Merchant, auto analyst at SMC Institutional Equities, joins us on the phone. Good afternoon, Ankit. What's your sense once you read the number? What's the first thought that comes into your mind?
Yeah, good afternoon, Darshan. So numbers are pretty much in line. I believe there's been slight miss on the front of other income also, which has impacted the bottom line. And if we have to talk about the EBITDA margins again, I think they were slightly ahead of the estimates, according to me. But I believe the raw material cost, as you rightly pointed out, has actually gone up slightly, whereas the other expenses as well as the employee cost, basically the cost reduction activities taken by the company, has actually helped them in boosting the EBITDA margins. And I think this is after quite a long time, the EBITDA margins have come back to the double digit after facing severe, pressure. So I think at this particular levels, Maruti, obviously, since its run-up was quite expected that to deliver better numbers. But I think these are very good numbers, and for an investor, I think it's a good times to get into Maruti at this point of time. However, one just needs to understand what is going to be the management commentary going ahead for the coming quarter, and from FY20, what will be the plans of the management would be.
Ankit, would these numbers, make you revise estimates for Maruti on the higher side, or will it remain the same?
I think more or less it will remain the same only. Yes, so we need to understand that what is the guideline for the next particular year. As far as the management had not guided any guidance for in FY20, FY21 will be keenly looked at after the BS6 comes in. Yes, Maruti has recently launched Alto and Espresso, which has been doing well, specifically Espresso in the rural areas. So how the demand will be forming up for them. Ciaz is one particular segment which has been struggling. The BS6 has been launched again in this particular in the same range. So we need to understand how the demand will be forming up. And SUV is a segment wherein the Tara Brezza is yet to see any model upgrade, I think, which will be coming up in this particular quarter. So I'll be very keenly looking out for the next quarter, how the numbers will be shaping up to revise my estimates.
Okay, Ankit, we leave it at that. Thanks so much. Ashwin Patil, a senior analyst at LKP Securities, also joins us with his perspective on the Maruti numbers. Ashwin, what's your first cut on the numbers?
I think the numbers have come slightly below our expectations, mainly at the margin level. Maybe about 50 bips or so, but nothing much disappointment. Yeah, slight disappointment on margin front. That's it, what I said earlier. And that was actually, I would say, because of the higher discounts that the company has rolled out in Q3, because obviously it was a festive quarter, and discounting as well as added promotional expenses also went up. Yes, and the raw material prices also, the RM to sales also inched up a bit, and other income was slightly below our expectations. But on and on, I would say it was not that bad kind of a quarter. And going forward, I would be maintaining my slightly cautious view on the stock for fourth quarter, because the management has not said anything. As the earlier speaker said, the management has not given any sort of commentary on how the Q4 numbers will be just before the BS6 gets implemented. And going forward, I think in FY21, after the BS6 dust settles down, the rural income and the rural income will be moving up, I think so, because of good monsoons last year, and the company has also launched Espresso and new Alto in the rural markets. They are really doing well. So I think the company can cash in on that front, as well as whatever new launches will be coming in FY21 will be most welcome. And I think based on that, I would be maintaining my positive view on the stock.
Given the fact that EBITDA margins have been squeezed, obviously realizations was much lower, and it's a known fact, and the management has also said that over the last 1 or 2 months they are looking to clean up the inventory so that they are BS6 prepared. You think that realizations will now move up, since that most of the inventory is gone and they will be able to bill at a higher rate now?
See, as far as Maruti is concerned, about 70% of their portfolio is already converted into BS6, and somewhat BS4 inventory is left out, and I think they'll be able to dole it out towards the fag end of this quarter. So after that, in FY21 onwards, with higher priced BS6 models, I would say that margins will be in a better shape. Maybe after after the implementation, maybe in April or May, I think the demand will be a bit subdued. But after that, with monsoons and better impact of the Rabi crop, I think the margins as well as the volumes should start more from June onwards.
What are you keenly watching out in the conference call? What are the one or two key things that you want to know from the management in the conference call?
We would be looking out for volume outlook for this year as well as next year mainly, and any a view on them on the BS6 as well as the BS4. I mean the transition from BS4 to BS6. And I would say that margin movement, what kind of margin portfolio, where are they expecting it to move on from here onwards? That would be the main key monitorables.
Okay, Ashwin, we leave it at that. Thanks so much for speaking to BloombergQuint. So that was the number of Maruti. Somehow in line or slightly below estimates, the counter not going anywhere. It saw a dip, has now returned back to the level it was, but it's seeing some bit of weakness on the EBITDA miss. I think the conference call today is at 3:30. All eyes on what the management says, what kind of outlook they can give, what's the inventory cleanup, what is the volume, what is the realization. So all those important questions will be answered by the management in the conference call at 3:30 today.